Welcome everyone to the Kindle Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight I'm going to try to unpack a number of things, specifically about what's going on with GME and Roaring Kitty and all of this. So let's get into tonight's video. Hang on, folks. Get the popcorn out. Okay, folks, I'm going to do my best to bring in a brief history because ultimately it's going to make a lot of sense. A lot of folks are talking about what's going on with the GME situation and the Roaring Kitty, but I want to talk about a couple things. I'm going to go all the way back to the crash of '87 because this is where a lot of regulation happened. I was a participant then. I was short the market. I had the perfect trade on. It was one of the trades of a lifetime, actually. And it was option expiration day. So I remember this like it was yesterday. The markets were down 58 on, I believe, Wednesday, 108. I'm sorry, it was Thursday, 58, 108, and 508. They all ended in eights. It was very interesting, Monday being Black Monday. But here's what happened, and I want you to understand, and I saw the regulators at the first time start to build this whole scenario that we live in today. So this will make sense, so stay with me. As we looked back at the crash, everything came apart. Order flow was disrupted. There was a lot of things going on with the clearinghouses because they couldn't keep up with the volume. Continental Bank of Illinois was on the edge of absolutely going down the tube, and they handled one of the biggest clearinghouses there was at the time, which was First Options. And that Friday, on this the 16th of Friday, was option expiration day. And what happened was every call option, back in those days, we traded something called the OEX or the S&P 100. That was a big contract on the CBOE, the Chicago Board of Options Exchange. And that option chain went out, every chain went out at zero on the calls. Never happened before and has never happened since, okay? When that happened, that set the tone for all of these disruptions that started to happen in clearinghouses. I have buddies and everybody was running over, going to try to do direct deposits with the Federal Reserve and getting 0.5% on T-bills just to get your money out of the clearinghouses the best you could. Everybody was wiring money. It was absolutely crazy, especially as you came into Monday, it even exaggerated even more. But what happened, there were no circuit breakers. None of that language was out there. There was what they called computer trading, where they could do blocks of trades. Supposedly that triggered it, one of those air quote moments. And it was absolutely insane. I can tell you, I had direct access. I had a huge position on. I had direct access to the pit where I could call the traders right at the pit and put orders in directly. And the orders were delayed at, this was on Friday on option expiration. The actual quotes that we were seeing on the screens were 20 to 30 minutes behind. And I remember this one market maker that this guy I was talking to said there were 3 markets on the one set of options that we were looking at. We had a bunch of spreads on. I won't go into the details of the trade, but it was there were 3 options that we were interested in, but in one option chain there were 3 locations in the pit that had different prices. So we were trying to pick which pool of traders to go into to trade out of. I came up with the ultimate strategy to get out because we had a big position. We just wanted to take profits. We had no idea, or wasn't even perceiving, that the market was going to be, down 508 on Monday, because that was the worst trade of my life, because the money that would have been made on that Monday would have been insane. Okay, didn't happen. We took all the profits. We took all the positions off on Friday, down 108 points, and I figured out that the only way that you were going to get out of the market was at the end of the session, because it was option expiration, everybody's going to have to liquidate and match up the orders. Whatever the price was going to be the price, but at least you would be able to get things done, because there was no liquidity when we were trying to go in the pit. We had literally thousands of these options, and there was no way to get out of this thing. So let's just spin forward. So the crash on Monday happens. They basically halted the market just because they couldn't even flow it. I don't even think there was any official thing other than the fact that it froze up, and there was no way to get through that. At the end of the day, we're down 508. That was just the most illiquid the market's ever been in the history of the markets. Maybe even 1929 didn't like this, because one of the things I have talked to you folks on this channel before is the difference between 29 and 1987 was huge as far as volume goes. Even then, the volume wasn't very big, but you come into today's markets where you're doing billions of shares, it's a whole nother level as far as if something like this would happen. So let's kind of break this down to what started to happen at that time. All kinds of the regulators were trying to figure out how they could protect the market. Now, I've seen some people saying that the circuit breakers are to protect retail customers. They are not to protect retail customers. They're to protect the market. And one of the things that is important to understand, the exchanges will survive at all possibilities. So this was 1987. I've got to get this history out. We'll see how this all plays out in this video. But literally in the big silver run-up, I want to start to set the tone, what regulators and how they will manipulate and what they are likely to do. And I'm going to bring this in to GME here and what could happen and some of the rhetoric around. No one knows what will happen. But let's just go from the standpoint, I go back to the silver squeeze. They squeezed it up to $50. And what did the regulators do? They put it in liquidation only. So you could not buy anything new. So they froze the buyers out. And they said, if you own it, you can only sell it, but you couldn't initiate any new trades, right? You couldn't buy at all. It was liquidate only. So what they did was they liquidated the market. If you look at that scenario, we went from 50, I think it traded all the way back down to 15 or 11 bucks, something like that. It was a massive drop because no one could buy. There could be no price support. Even if you thought it was worth something, you couldn't initiate a new buy. You could only exit. So the only people to buy were the shorts, so they were able to get out. So let's take that and let's move this forward now. Now we come into this whole situation with what's going on with GME. Actually, one other story before I move on is in 1990, I worked at a firm and we were the largest commodity traders on the planet at the time. We were the largest firm. It's called Stotler and Company. And our chairman of our board was also chairman of the Chicago Board of Trade. And what happened is somebody screwed up in the finance, the CFO and the CEO actually screwed up some financing, and we got forced into liquidation only. And this is where I saw, once again, the regulators come in and they froze the books, basically forced all the positions to be moved to other firms. All the customers, everybody, all of us that had positions were just stuck in this thing and you couldn't get out. I remember sitting in my office thinking, here's my whole livelihood. That this is, at that time, almost, there's 1982, like 12, 14 years into I take that back, 20 years into my career. Okay, and so the point is that what we finally start to see is these regulators come in, and here's the deal. If anything is in question, the exchange will survive. They will do whatever it takes. They will force you to go into liquidation only. If the powers that be say, we're going to save the exchange, that's what's going to happen. So let's take it to this GME Situation and Roaring Kitty. He's got these, there's a big squeeze going on. I think the stock traded up to 45 bucks. At the end of this video, hang around, because I'm going to show you an analysis of what I think is going to happen. Actually, starting tomorrow, we'll see if it comes into play. We go back all the way into, now we go into 2008. I want to touch on these because it'll all come together. 2008, we had circuit breakers. All of those elements start to come into play. And so they started shutting the markets down and trying to control the selling. And I'm telling you, it's not to protect the retail clients. These firms, the exchanges don't give a crap about retail people. They only care about themselves and the major participants, which are the institutions. So that is true, that the institutions are good and the market makers. So if you think about what I said a minute ago, the clearinghouses were the weak link in 1987. Now we move forward to 08. It was the banks and all the illiquidity because of the terrible assets were on the book, the phony mortgages, if you will. So now we go into 2010, and there's a video on this channel that will goes through the flash crash of May of 2010. And I was trading that day. There's a video there, and I broke down the whole scenario. Every trade that happened in a certain period of time when the flash crash happened, they just made them like they never happened. They matched up all the trades. They figured out how to not hurt the wrong people, and they didn't care who they hurt as far as scratching trades. They just took the whole block out. I'm still shocked sitting here today doing this video that somehow, some way, that there wasn't class action suits over that. It was absolutely crazy. Every trade during that period of time, all of us that traded during those moments, I think it was around 22 minutes, something like that. It might have been as much as 28 minutes. They just made them go away. So this is my point, is that these exchanges will do whatever it takes to protect not the integrity, to protect themselves. They will survive. So now basically the CME, everything's kind of merged into one giant pool. There are a couple entities, but everything's been consolidated, and now we're talking about billions of shares, right? So let's get into the GME situation. I've seen some videos out there that they talk about these dark pools and the pay for order flow. Order flow's been paid for forever. That's always been part of the game. There was firms when I was on the Pacific Options Exchange. There was a firm called Casey, and they did all the executions for Goldman and other folks. You knew you were about to be screwed when these guys walked up because they had big orders and they were just going to crush the market or bid it, whatever the scenario was. But these guys have always been around the streets. So when a retail order goes in, there basically these people will bid for them, the citadels and all the market makers. They bid for those orders. They have to decide how to fill them. If they can take them on the books and give you a price, whatever the current range is that's happening out there, maybe not the best price or whatever, but they have to give you a price. And I saw somebody talking about that your orders don't actually affect the prices. Yes, they do. Those firms that are taking that order flow have to fill you at some level within a few nanoseconds. There's time and sales, other things that they have to fulfill. They can take it on the books. They can take it out to another market maker. They can go to the street, and this all happens in nanoseconds now, because you've got all the algos that are trading, right? So when people say 80% of the market's being traded by algos, it's actually these algos that are matching up orders, okay? So they can decide very quickly. The machines will decide where the order flow goes or how much they want to take on. If people are selling, especially like a day like today where maybe they're selling, they think, okay, $22, they might put those shares on the books, and then as folks are coming in to buy, they're selling them out. They get to be in that business. Somehow it's built as some kind of conspiracy. It isn't. I'm an ex-market maker. It's just part of order flow and how where the volume goes. But your orders do actually affect markets, especially when you have an army like everybody that's coming in. That's why we traded $45. It wasn't manipulated by anybody other than lots of folks were buying. But here's my point. The Roaring Kitty, he has bought all these call options, right? And he's going to execute. Anything over, I think, $21 is money. And I think today it was like a $300 million profit. So here's what I'm telling you can happen. These firms, whether it's E-Trade or all these folks that are holding these trades. I saw Dave Portnoy going nuts because they were shutting down the markets and saying, oh, you can't execute the orders or buy or sell. And Robinhood did this again. There's a lot of stuff going on, and this thing is going to blow up. But let's talk about what would happen if they took and threw Roaring Kitty out of E-Trade and said, hey, you have to go somewhere else. If I'm a broker dealer, I'm taking his business completely. But my point is here's what the final, my view of what could happen. If there's any material losses that can happen to the wrong people, they could come up with a silver situation I talked about a minute ago, where you're actually looking at the where it's liquidate only. They can manipulate, they can change the rules on the fly, they can do whatever they want. They have the keys to the city, so to speak, and they can make these changes. But they're going to have to be very, very careful. In the world we live in today, that there is transparency, and they could lose complete faith in the market. So let's say this. If something blew up and let's say the stock went to doubled or tripled from where it is right now, could that destroy the markets? Possibly. Could it crash things? Sure. That's always the possibility. People talk about black swans and they're trying to predict them. The point of a black swan is you can't predict them. Is what we're going to have to watch. I don't have any of the answers. But what I do have is the experience of seeing that these regulators will do whatever it takes to survive. The exchange will move on. And it's not just the regulators from the SEC, it's actually the internal CME, the New York Stock Exchange, all these guys. It is a giant club. As I think George Carlin said, it was about the government, that's a giant club and you're not in it. But they will survive. They will do whatever it takes to make this settle out in some way. So we're going to see a bit of history here. I think this is even maybe bigger than the 21 situation, but it's going to get very interesting, and most interesting because of what they are potentially going to do. All right, so let's go to the charts. I told you I would give you some analysis. I've just been rattling on. I hope this makes sense. I had a conversation with some folks earlier today, and I thought, man, I wish we would have recorded it. It was perfect. But I tried to redo as much as I can. So let's go ahead. Let's take a look at the chart. We're seeing a couple things, and those of you that have seen the video I did recently on the V-Trade, I want you to notice something here. I'm going to draw in all of these trades right now just so you can see exactly where they are. But look at this. We've got V right there. There's another one. There's another one. All of the indicators are showing and projecting that we're going to see a decline here. If you look back at this bar here, this that we had just recently, this is, let me look at here. Yeah, this is a daily chart. So this was a squeeze here. Look, we've got these same V patterns right here again. And you could argue if you want that there's divergence in the peaks. So this could even be potentially more negative. So what's being projected by WaveTech algos are suggesting that today's price was most likely the top. Now, if we come in, those of you that have the indicators, you should see all of these turn down here, these V's start to form on each one of these. So you'll get down ticks here, and that's what you get, and we get a red bar tomorrow. We should come back into this thing. But what would be interesting about that, if we start to see that happening, why is that happening? Was there a rule change? Was there something that came out? The exchanges went to liquidate only. That's why I'm doing this video, because I think it's interesting. I just happened to be looking at GameStop and I saw this V pattern. So this is a big deal here, I think, folks. So I hope this video actually helps you to understand. We'll see if the predictions that we're going to get a top off of today's values. You know, you got to keep finding the bag man, someone else that wants to pay up over $45. We'll see what happens. But the algos are suggesting it's going to go down. But I want to pay attention, keep your ears open. What actually is the event? If it does turn around, was there any kind of visible manipulation, rule changes, any of these things? And there's so much more I could tell you. I could go on for each one of these stories and events that happened in the past that I've lived through, and there's all kinds of details that come to mind. So I'm just trying to unpack this the best I can, give you some insight, but more importantly, I want to see what these people do and how this thing plays out. I hope the guy makes $1 billion, okay? He played within the rules of what he's told. He's under 5%. He didn't have to file anything. You see all of these people on there, depending on who you're talking to, talking about he's manipulating the market and all that. No, he's not. He's just doing what he's within the rules of the game, that he's playing by the rules. And I can tell you, it's going to be interesting if they do something to the situation. It's going to create some really bad press if it's not handled right, and it's going to be interesting, folks. So I hope you found this interesting. If you did, click that subscribe and like button, and I'll have more videos as we go forward. Thank you. Talk to you soon.